So good afternoon, ladies and gentlemen. Welcome to Haitong Securities UK office. Here today we are holding our China seminar, which we are going to talk about China stores open up. Today we are very glad to have our guests from China, where we have our China chief economist, Dr. Jiang Chao. And also we have some of our guests and clients from China, from various China asset managers, that including China Asset Management, China Southern Asset Management, Guangfa Fund Management, and also Haitong's Asset Management subsidiary. The four firms together manages about roughly 4 trillion RMB in total in terms of AUM. And also we are very glad to have our guest speakers from Barclays, from HSBC, and also from our QFII team talking about opening up of China's market. Very welcome today. Welcome to the Haitong UK office. Welcome to our event here. We would like to very much to share your reviews and opinions about your ideas of your interest into China, and also use this seminar as a way for us to communicate and debate on opportunities in China. So without further introduction, I'm going to first introduce our first speaker, Miranda Carr, who's our China analyst, and she's going to talk about her observation on the China market.
Yes, well, thank you all very much for turning up, and hopefully we can give a bit of an insight into what's happening with China, and with a particular sort of emphasis on the sort of macro and the fixed income side. Before handing over to the people you're no doubt desperate to listen to, which is Jiang Chao and all the asset managers, I just want to start off with observations about some of the issues that we think that some of the investors are having over here, particularly the sort of more sort of global investors when they look at China's markets. Because we reckon we're in a kind of weird state in China at the moment. When I first started doing China sort of over about 10 years ago, it was quite easy. You know, the state-directed prices, you knew what the interest rate was going to be, you knew what oil prices were, and you knew what food prices were. But that's no longer the case. We're now, since 2012, we've moved into a market-based pricing mechanism. And so everyone obviously over here was joyed that we should have a market-based pricing mechanism. But it's not quite so straightforward. What we're having is we have a weird halfway house at the moment, which I think is actually confusing a lot of the investment decisions being made about China, because some of it is state-directed and some of it is market-priced. And the trouble is you're getting market mechanisms which are then state-directed. And I think probably one of the biggest ones that caught everyone out over the last year has been the commodity prices, where you have supply-side reform, a government initiative, meaning that you had commodity prices obviously rocketing up 50 to 100%. But as it was a government mechanism which caused it, but people that over here then misread it and thought, okay, we're in a massive cyclical upswing, which is possibly going to be, it's going to be 2009 all over again. That didn't actually happen, and this is why I think in some of the markets you have to understand both where the liberalisation has come from, but also where the control is being put forward. And I think this is particularly an issue at the moment where we're having more regulation coming into the fixed income and money markets, which is then distorting the pricing, which is obviously what you're seeing on the terminals. Because you've had successive waves, so this is equities, margin trading, that huge liberalisation. Then the national team comes in. Money markets, yes, huge liberalisation, interest rate liberalisation there. But then the PBOC starts using targeted tools. Commodities, again, supply-side reform. Currency, which used to be, that was meant to be the massive liberalisation. Now we're currently in the process of capital controls, very tight band there. And now sort of bond markets, where the state intervention in the bond market is, particularly from an outside perspective, very, very difficult to judge, and so therefore very, very difficult to price. Because at the moment, what you can see, this is nice colourful chart. You're seeing, we saw the first wave of the liberalisation sort of 2012-13. So huge increases in the shadow banking, the stock market investment, etc., and the bond market, and then obviously a regulation. And so 2014, everything was all quite quiet, and there wasn't much change overall in the markets. Then we've had another big wave of liberalisations, which has caused, first we had the margin trading, and then bond issuance, and then also the commodities futures boom. So we've had that wave of liberalisation, and now we're back into regulation again. But the regulation is not across the board, and it's being quite targeted. So in terms of it being a problem for China as a whole, it's not, but it is a problem for certain bits of it. But just a sort of quick sort of run through some of the where the mispricing may occur, because if you look at the equity market, I was quite surprised by this. I was thinking it's been quite quiet since basically January. And it hasn't really moved very much. You've got a few sort of ups and down days. But it wasn't until I looked at the volatility chart, and that's the Shanghai Comp and the CSI 300's now at the lowest ever volatility going back to 1992. And that's mainly because obviously if you're looking at the big cap index, particularly the CSI 300, the banks and the insurance companies are being supported. They're then supporting the index, and you've just basically removed all the volatility. So that's fine. I mean, in some ways, it's nice having an A-share market, which isn't quite so volatile as it used to be. People are a lot more confident about it and prepared to invest. But how do you then price a market where the volatility is being taken out by the state? Do you think, okay, well, that's a great thing about investing in China. I have a state-directed market price now, and the volatility is fine? Or do you have to price in state risk factors into that? I mean, I'd say it's an unnatural place for a Western investor to look at a market where you're basically relying on that state intervention to keep your risk-adjusted returns safe. The other one I mentioned earlier, obviously the commodity prices. Now, where the state intervened on the left-hand side is what gave everyone the strong signal. This is the reflation trade. And actually, sort of our economist Zhang Chao was very forthright on this all through the last year, very much going, the prices have gone up, but demand has not gone up. So if you don't have the demand replacing that, the prices are going to fall back down again. And if you look at the non-state supply-side reform sectors, this is where you're seeing the real demand come in. And prices have recovered, but they're no sense of that reflation trade. It's basically a bit of a recovery. It's not a massive rebound. So this is where the state intervention has put in strong signals. In current markets, one of the key issues that we have is what's happening with PBOC monetary policy and how it's managing the money markets. Now, previously, obviously, you could just look at the interest rate, but that's not so simple now. You're now seeing, I mean, that chart shows you the complexity of the PBOC monetary policy tools, which are now being used to guide lending pretty much all the way along the yield curve, particularly, but also directing it to which institutions get money and which don't. And this is why in the current markets where you're having money being taken away from the small institutions, the asset management and the trust companies, you're now seeing, thank you, and you're seeing it being directed through these monetary policy tools back to the banking system. So it's a very, very tight management of the interest rates. And so it's a market-based mechanism, because these are all money market rates which they're being directed. But it's the PBOC which is controlling all the way along. So this is sort of the micromanagement that we all have to get used to now. I mean, they have said that they're only going to use two rates now, the 7-day repo rate and the 1-day one-year lending rate, but you still have all these different tools to manage. Then quickly, obviously, the PBOC is with the CNY and CNH managing it within a very, very, very tight band. And a lot of the commentary is all about the currency is now not a problem anymore. It's not a problem anymore because it's only allowed to trade within a very, very tight band. So this then brings us onto the bond market, where we're seeing more defaults coming in, but again, very, very tightly managed. And particularly within the overcapacity sectors, where the pricing has benefited a lot of these companies. So this big wave of defaults we were expecting last year isn't happening anymore. The state support has come in, but not through the conventional channels of direct state support. It's come through in supporting the profits of these companies, and so therefore the defaults aren't coming through. So the pricing of these bonds is becoming a lot more attractive, but it's a lot of it's becoming more attractive because you have the state support coming in indirectly. And then finally, this is one of the most interesting ones, because you can actually see the effects of the market pricing, where local government bonds all issued pretty much in line. Tibet can issue at a lower rate than Shanghai. But what you're actually then seeing is with the quasi-municipal bonds, where state backing has been removed, suddenly, just over the past 6 months, we've seen a massive change and a big increase, 50 to 100 basis point increase in yields. That is the price of the removal of state support. And that's only happened in the last 6 months. We're still adjusting to that. So, I mean, I think that gives a strong indication that the pricing of state support in the Chinese market through the market mechanisms is still exceptionally strong. And misjudging that or being on the wrong end of that is potentially a massive risk for investors, who are looking at China from a distance. So just to round up, we think sort of state intervention in the equity market probably beneficial overall. It gives you a sort of certain put option on the sectors. But in terms of the bonds, we think the state intervention is arguably becoming the opposite. It's becoming more uncertain. It's more tricky to read, particularly in the quasi-municipal market. So, given this, the sheer change, the fluctuations, and how the government's managing this, I would like, particularly for the sake of my voice, to hand over to Zhang Chao, who can give you the H2 outlook and how he sees the economy going forward. Thank you.
Next speaker is Mr. Zhang Chao, and his presentation is going to talk about his insight views into China's macroeconomic condition. Very interestingly, his speech title is half flame and half water. So let's see what he's going to say about the China market.
So it's my honor here to share with you my view of the Chinese economy. So this is my first time to speak in English to give an open speech. So thanks for your patience. So can I have a PPT? Yeah. Okay. Okay. So this is my speech. Yeah. My title is half water and half flame. So this means, in my view, that's half of Chinese economy, half is bad and half is good. So my speech we are taking into three sections. So first one, so we're looking into the Chinese economy in the short time period. So from the past 1.5 years, we have observed Chinese economy to have a very, very short rebound. Right now, the GDP growth rate is raised back to the almost 7%. So with the economic recovery, we also observed a very strong corporate profits. So right now, the profit growth rate is around 20%. So it's very good right now. But recently, since last month, we have observed that the economic growth began to slow down. So we're looking carefully into every industrial production field. For example, the power generation speed, and also the steel production, and also the cement and the automobile production growth all began to slow down. So we think the rebound has gotten to a peak and began to slow down again. And the reason behind that is that we believe this round of economic recovery is a typical inventory cycle. So in the last 1 year, the company began to add inventory. But right now, we observed the inventory level is quite high compared to the last 6 years. So this means these kind of strands are losing speed. So we think right now the inventory cycle are in the end. So the growth will slow down. And also with the economic growth began to slow, we have observed that the inflation began to fade out. So the commodity price will begin to drop. And also in the inflation side, there are two important inflation indicators. One is the PPI price. This is the industrial price. Right now, the number is still very high, but it began to drop. And the other one is the CPI, is the consumer inflation index. Right now, it's very low. It's just around 1%. So this means with the economic growth began to slow, also the inflation price here began to fade out. So this is our picture of the economy in a very short time. So typically, when the economy and inflation began to fade out, our forecast is that the monetary policy will be loose again. So there will be opportunity in the bond market. This is the typical thought in the past. But this round is quite different. So we come to the second section. So we are talk about right now the monetary policy. So we think it's still very tight. And the reason is because we are doing the financial deleverage. So if we compare the interest rate with the inflation level, so looking to the past, these two indicators are quite in line with each other. But this year, it's in the opposite direction. So we can observe the inflation to going down, but the interest rate is still going up. And the PBOC, they have increased the base rate in the financial market for 2 times. One is in the February and the other is in the March. So this means we have begun to increase the interest rate in the financial market. So it's quite interesting because in the past, the PBOC only considered the domestic things, for example, the economic growth and also the inflation. But this time, I think the reason behind the increase of the interest rate, one thing is with the outside world. This year, the Fed began to increase their Fed rate more frequently, so it has some pressure on the Chinese interest rate. So in order to keep the RMB, keep the exchange rate stable, so when the Fed increase their interest rate, so we must follow at least some extent. So this means this year we have added something to our monetary policy. So one thing is the exchange rate is different from before. So I think one reason behind the tightening of the monetary policy is because of the Fed. So everyone is following the Fed. And the second reason I think is with the domestic market. So when we do this kind of financial deleverage, so everyone maybe is shocked. But we have tell our guests, tell our clients at the beginning of this year, so everyone should pay attention to this kind of financial deleverage. So why do this? So first, we should look carefully into Chinese financial market, because right now, so the first question is that, so how much money is in China? So maybe everyone, we are paying attention to the M2 growth. This is the borrow money in China. So this is given by the PBOC, by the official. So M2 growth right now is around 10%. It's quite low. It's the lowest level in the last 20 years. But it can't explain why there is so much jump in the housing price in the last 2 years. In the typical tier 1 and tier 2 city, the housing price nearly doubled in the last 2 years. So I think this money cannot explain the performance of the housing price. So we began to wonder, so what is M2 in China? The M2, the borrow money, mainly includes all the deposit of the Chinese banks. So this means the M2 is the deposit. But the deposit, which are connected with the commercial banks, commercial banks, they borrow money through the deposit and they issue loans to the economy. So this is what the commercial banks do in the past. But this kind of commercial banks, they are governed heavily by the government. So this means they can only develop very slowly. So in the past few years, so we have observed that commercial banks, they are transit into investment banks. So they began to borrow money in the financial market, and also they began to issue loans to the financial peers, to the financial institution, to avoid the supervision. So if we're looking back into the bank's balance sheet, so it's very, very different with before. The deposit and the loans, they are grow at a very stable level, just around 10%. But the total balance sheet of the banks, the total assets, the growth speed last year is around 16%. So we must look into a broad picture. So the banks, their growth speed is 16%. And the whole financial system, we look into every financial business. For example, the trust company, their growth speed is above 20%. And the insurance company is the same. And for lots of balance sheet banks activities, for example, the wealth management products, they are not on the balance sheet of the banks, but the growth speed is above 30%. And with mutual funds in China and private funds in China, the growth speed is above 30%. The last one, the security firms, asset management firms, their growth speed is around 50%. So if we sum this together, so we have this picture. So the total financial institution, their total assets, the growth speed is around 20%. Maybe there are some calculation, maybe with each other. So we think our real money growth is at least, is net growth speed of the banks is at least 16%. But at this point, we must begin to think that why the PBOC or why the central bank give us a money target. Last year, the money target is 13%. This year is about 12%. So we think the PBOC give us this kind of money target because he care about the economic growth and also the inflation. So our GDP growth rate target is around 7%, and the CPI growth target is around 3%. So this means 10% money growth is enough for the economy and also the inflation. So maybe 12% is okay. But the real money growth rate is much more than that. It's nearly maybe 20%. So this gives us this kind of picture that if we compare the money the banks create, and that if we compare the needs of the GDP, so last year, we create about 6 trillion RMB in the GDP. But the banking system, they create about 30 trillion in money. So a lot of that money, they exceed the needs of the GDP, and they are going to the housing market. So this is why the housing price are so good in the last 2 years because a lot of money are created by the banks and they go into the housing market. But this kind of game, I think, is very risky because this kind of money, they are not financed by the traditional deposit. They are financed by the financial borrowings. This kind of financial liability is very unstable. You must borrow money in the financial market almost every day. So this is why this year the financial market, the interest rate are a lot much than before because a lot of small banks, they must borrow money every day. So the financial system is no longer stable anymore. And so this is why we are begin to do this kind of financial deleverage because the financial banks and they are growth too faster than the real needs. So how to do the financial deleverage? So first, so the government began to limit their development through the financial borrowings. So they began to control their borrowing in the financial market. So this is the first step. The second step is that they began to control their growth in their assets. In the past, some small banks in China, their growth speed is around 50%. It's much more than the needs of the real GDP, and they create some bubble. So from this year, so we began to look carefully into the capital adequacy ratio. So the PBOC and also the government, and they tell every banks, so they must see through their assets. In the past, maybe they hide their assets through some kind of financial peers. But right now, they must see through their assets. So every assets or every loans they issued must have enough or must occupy enough capital. So this means their growth speed can never exceed that of the capital ratio. So this means their growth speed will slow down. So I think this year our target is to control the growth of the banks. And the target is to let every banks, their growth speed to keep in line with the M2 growth rate of the PBOC. So the M2 growth rate target this year is 12%. But last year, the banking system, the growth rate is 16%. So we have observed with the financial deleverage, the asset growth of the banking system began to slow. And just last month, the speed is around 13%, but still 1% higher than the target. So we think we still need some time, maybe 3 to 6 months, to let the debt of the banking system to grow in line with that of the nominal GDP. So to stabilize the debt with the GDP ratio. So this is our goal, to control the growth of the banking system. But with this kind of control, I think there will be some effect. First, I think the housing price will face a big challenge because this means the money to the housing market will be less than before. And also, I think the interest rate will going up in the household loan part. So with this kind of challenge, I think the housing price maybe will not increase so much, or even drop a little this year. So I think the housing sector will facing some challenge. But with this kind of tightening monetary policy, so what should we do and what should we think about the Chinese economy in the future? This is our suggestion in the third part. First, I think with the tightening of the financial market and with the change of the banking system, I think the total social financing right now will decrease. And because the Chinese economy still rely on money, so I think the short-term economic prospect will not be so good. So we forecast the GDP growth rate will keep slowing down the rest of this year. So I think we will have some effect on the growth side. So talking about investment strategy, so when the economy is good, so we should invest in the equity market. But with the economy, when the growth slow down, the equity market maybe will lose attraction. But with the tightening of the financial market, the interest rate is still going up. So this means in the bond market, we are still waiting for the opportunity. So this means both in the equity market and bond market, right now is not a very good time to join the market. So our suggest for our clients that right now, the main maybe the wise maybe advice is to hold cash first. And right now, when we mean hold cash, we mean we should pay more attention to the money funds. Right now in China, the money funds, their return is very high, it's as high as nearly 4%. So the biggest money fund right now in China, the size is over 1 trillion RMB. So because the money rate is quite high, it's nearly 4%. So this is just a money fund. So I think right now, first thing is that the money rate is very high. And the second thing is that when we talk about cash, we should compare the cost, especially the opportunity cost. In the past, the real money growth rate in China is quite high. It's nearly maybe 20%. So this means the equity or the asset price we are going up. So you should not hold cash at any time. But when the government began to handle the problem of the money growth, they began to reduce the money growth. So this means the asset price, especially in light of the housing price, will not increase so much. So this means the opportunity cost of the cash will be very low. So first, I think cash is good in short time, and the opportunity cost is quite low. And the second, we think if we want to earn more money, if we can have some risk, so we can see another picture of China. First one, I think, right now, I think the whole world is in a very short recovery, maybe not so strong, but I think the recovery is still up. So our exports to the rest of the world is still positive. So we can pay attention to those companies in China which exports a lot to the world. For example, we have this kind of media group. Maybe half of the products are exported to the world. And right now, he has this kind of robots company in Europe. So I think for those Chinese company, which is not only a Chinese company, which is the world company, this kind of company, which is still very cheap in the market, you can step in when his price drop. I think it's a good maybe opportunity to invest when price is very attractive. So first, I think the export part is still worth pay attention to. And the other part is to the financial market. And this time when I came to Europe, so many clients tell me that they are very interested in the banks in China, because banks in China right now are traded in a very low PE. The PE ratio is about maybe 7 or 6, so it's quite low, and the dividend yield is around 5%. So everyone may want to buy banks. So if we talk about banks, I think right now China is quite like the US before the crisis. So if we compare, the bank's activity is quite different. The Citibank, which has a very high leverage ratio, and they suffer a lot from the crisis and never come back again. But for those Wells Fargo, which reduced their leverage before the crisis, and they recover quickly from the crisis, and they are even better before. So I think this time we are quite like the US before the crisis. Our banks, their behavior is quite different. Some banks still grow at a very fast speed, but some banks, they began to change their behavior and they began to shrink their assets. So I think it's very good. So if we look into this picture, this is the growth in the last year and in this first quarter of the Chinese banks. So you can see for those 4 big banks, their growth speed is quite low. So this means they can still grow at this speed and their risk is very less. And for those small banks, their growth speed is very high and they can never come back to this speed again. So maybe they will beaten heavily in this kind of financial deleverage. So maybe another bank is the China Merchant Bank. So I think for banks, you need not only shrink your asset, but also you must have some business. So China merchant banks, his retail business is very good. So maybe he can get through this kind of financial deleverage. So this is our view of the banks. And another financial business is the insurance company. So right now in China, the interest rates are quite high, but it is in the opposite direction of the economic growth. If you look into the U.S., even the economy is in recovery, but the 10-year Treasury rate is still quite low because the recovery is not so stable. But in China, the economy began to slow, but the interest is still going up. This is because we are doing this kind of financial deleverage, and some banks, they must sell their assets. So I think this kind of interest rate increase will not last long. But this kind of opportunity can only share by the insurance company because they have longer duration. So they can share this opportunity to invest in the bond market. So I think the insurance company right now, they are quite good in this kind of interest rate field. And the last one, if we're looking into the Chinese company listed all over the world, not only in Asia but in Hong Kong market and also in US, so we observe that a lot of Chinese stocks, their performance is quite well this year. So basically, they are in two sections. One is in the consumption field. The other is in the service field. For example, the Tencent company or the Alibaba, the Jingdong, and the education service is all very booming. So I think for China, right now we are going through this kind of transition from the industrial-led to service-led, and also from the investment-driven to consumption-driven. So for those consumption and also the service-linked company, they still can pay more attention to. So our advice is that we are doing this kind of financial deleverage, which is not good for our short term. So this year we should be cautious when we invest in the market. But I think for the long run, it's good for our future. So if we're looking back, just maybe 3 or 4 years ago, we began to do this kind of interest rate liberalization. So our goal is to let the market to have the right money in the right place. But the outcome is quite different. We have observed a lot of small banks, small insurance companies became very big. This is because they issue very high yield products to attract money, and they put this money into the housing market. So this year, we began to punish this kind of activity, and we began to draw a line between the financial institution and the government. So if we can give this kind of small or bad financial institution a license and let every financial institution to do good in the future, so we can be more maybe believe in the future of the Chinese economy. So wish everyone could enjoy maybe something in the future. Thank you. Okay. Is there any QA section?
Yeah. So we will start up for a short QA session. If you have any questions for Dr. Jiang and for Miranda for like 5 minutes or so, then we will start the panel. Please.
Regarding those smaller banks which are funding themselves in the interbank market, I guess they're also funding themselves with those money market products. Do you see any risk of, in the event of a real estate crisis or, simply a cool down of that market, do you see any risk of any of those banks having trouble to fund themselves?
So maybe I can say, you can help. So I think it's very hard to tell or to forecast the future. So maybe I think maybe some banks will have trouble maybe to finance their liability. So maybe we should maybe be careful about this kind of maybe reaction. But in China, the size of the largest 4 banks is nearly 50% of the total banking system. And for the mid-sized banks, maybe another 30%. So for small banks, they only account for about 10% of the total financial system. And in China right now, we have this kind of deposit insurance policy, and they are in effect since about 2 or 3 years ago. So this means even some small banks, maybe they are failed, but their deposits are backed by the banking insurance company. So I think maybe some banks are punished, but they will not affect the deposit system. And also they are controlled in the small banking system, so not affect the large banks. Because for those large banks, their past growth rate is just around 10%. It's appropriate with the GDP growth rate. So I think their development is still stable. So only the small banks, they have some problems. So we should be cautious of the small banks. But I can't assure you that there will not be maybe some big things. So I just tell you that this year to be patient. We can wait and see. So I can't tell you the future. Yeah.
I have a question on the deleverage. I think every government, when they recognize there is bubble in the economy, they all hope to deleverage slowly, but they are not always successful in doing that. So I think in the context of China, my question is, where you say is the most vulnerable part of the finance industry, and if anything goes wrong in a bull scenario, what would happen? I mean, is what happened in 2015 is they wanted to deleverage, and once they started it, the market just collapsed in the equity market. So, I just want to hear your general opinion on deleveraging, whether it's possible to have some much drastic change than the government wanted.
Yes, just now I gave you this kind of picture, and it's the growth speed of the financial institution last year. So for those financial companies which growth speed is very quick, so they face the most tight governing. So in this picture, so I think for security company asset firms, their growth speed is too fast, so they face a big challenge. So right now they are governed heavily by the government. So first is the security firms, and the other is with the small banks and the small insurance company. Their growth speed is nearly 50%. So I think for this kind of small banks, small insurance company, and also with the security firm, asset management firms, maybe their growth speed is so fast, so they are governed heavily by the government. And for the total, I think for how to do the deleverage smoothly. So I think every government first, should they do this? I think we should do this. If we don't control the growth of the financial institution, it will be a disaster in the future. So first, I think it's right to do this. And second, how to achieve the goal. So if we look into the leverage ratio, is the ratio between the financial institution debt with net of the GDP. So I think if we control the growth of the financial debt, so maybe they can keep in line with the growth of the GDP, nominal GDP. We can control the increase of the debt with GDP ratio, but still we cannot decrease the debt ratio. So I think maybe the trick is to net the debt, to cut the debt. So this means we should have some fear in the banking system. So if we compare those deleverage, the Japanese never never recover from that because they don't want the bank to fail. So they bail out every banks, but they lose their maybe 20 years. But in US and right now in Euro, banks can fail. So we have done this kind of deleverage back into year 2013. We have done this kind of deleverage once, but we achieved nothing because at that time we don't let the banks to fail. So this time I think if we want to be succeed in this kind of deleverage, first we should punish some bad banks or bad insurance company this time. And if we punish them, then the PBOC can come in and they can lose monetary policy again. So I think we can lose the monetary policy, but we should do it before we punish small banks. If we lose monetary policy before we punish banks, they will put this kind of money into the housing market again. So first punish them, then the people come in to inject cheap money. Then the banks they can use this money to the right place. So I think this time maybe if we want to do it successfully, maybe some banks will be publicly punished this time. So I think this is the trick. But people may wonder that in China, so how dare the government do this? So let some banks fail. So if banks fail, then maybe will be a disaster. So every time people will think the banks fail, then people will lose jobs. But if we're looking back, for example, in US and in Euro, the step is that first is the deleverage in the financial market. Then banks fail, then maybe come the deleverage in the economic side. So the economy will be very painful. So the unemployment rate will reach about 10%. So this means a lot of people lose their jobs. But in China, it's very interesting. Last year, so we shifted the sequence. We do the deleverage in the economic first. So we cut the supply in the steel industry, in the cement industry. So this kind of industry, they are now living very good. So we first do the deleverage in the economic side. This year, we began to do the deleverage in the financial field. So we changed the sequence. So this means even the financial institution right now, they are very painful. But in the economic side, because our profits is still good, this kind of overcapacity industry, they are right now very good. So we shift the sequence. So I think this time we can do this kind of deleverage in the financial market because we just do the deleverage in the economic first. So I think this time we have this kind of hope. So this is our forecast that maybe there will be not a disaster because the economy is still good in the profit side. Yeah.
Thanks for your speech. And according to your estimation, in the recent future, the housing price and sales in China may drop. And I wonder if this is a case for all tier cities or just the tier 1 or tier 2 cities, because the housing price is still have a great gap between these different cities.
I think if we study the housing price of China is very interesting right now. For those maybe 70 major cities, maybe 60 the price are going up, but there are maybe 10 or less than 10 cities the price still are going down. So these cities are mainly in the northeast of China. So I think because northeast of China is a traditional industrial base of China, but there people are coming out. So I think the people are the most important thing to determine the housing price. But right now in China, I think the younger people, they are still coming to the tier 1 and tier 2 city. So for this kind of city, their housing price still have a very strong support. So maybe the housing price will going down a little bit in a short time. But if the people keep going to this place, this kind of tier 1 and tier 2 city housing price will still have very strong support in the future. So just a little bit, maybe come back in the short time. But for the tier 3 and tier 4 city, I think it's different. For those tier 3 and tier 4 city around the tier 1 and tier 2 city, I think it still has hope. Because when people cannot afford to buy a house in the tier 1 and tier 2 city, and because right now the highway is very free, very just is very useful. So you can buy just nearby the tier 1 and tier 2 city. But for those not near the tier 1 to tier 2 city, I think maybe the housing price will have problem in the future. Yeah.
Thank you very much for the speech. I just want to understand two sides of the balance sheet here. On the liability side, we have a reserve requirement ratio in China, which is quite high, which leads to a problem of shadow banking and wealth management products, which distorts the market mechanism of collecting or the allocation of savings. So is there any chance that a reform on that front where you can get rid of these wealth management products and bring the shadow banking from the liability side of the balance sheet into a monetary policy induced system? That's one side of the question. The other side of the question is on the asset side of the balance sheet, where we have NPLs, which are quite significant, and dinosaur NPL, which are dead and buried, but they keep on creating inefficiency in the money multiplier or rolling off liability asset side of the balance sheet. Are there any steps to take into account on that side rather than tinkering with how much growth of the loan book should be or how much debt to GDP ratio will move? Unless the asset side starts to function properly on a market-based mechanism, these matrices will just be matrices which are managed rather than see the real impact on the economy. Are there any thoughts or any ideas on that front?
So for your first question, I heard clearly, but second, I heard not so good. So maybe I will ask you to tell me again for the second question. So I answer the first one. So I think for the banks in their liability side, they have the traditional deposit. They must give this kind of the reserve to the PBOC. But for them, they found this is not so good. So they began to issue the wealth management products because with high yield, they can attract more money and they can do this kind of off-balance sheet activity. But right now, this kind of activity, they have something harmful for the whole economy. So the government began to handle that. So they are with this kind of governing coming, I think, they will come back to the traditional deposit business again, I think. So I think this one is not true. So maybe in the future, I think the banks maybe will come back to the traditional commercial banks again. So they will governed by the reserve ratio again, I think. This is for liability side. And for the second question, so I'm not so sure your question is that. So how the government to handle the shrink of the assets with net of the GDP growth, is that the question?
Sorry, the question was the asset side of the balance sheet has an NPL.
Yeah, NPL, yeah.
Loan book, right?
Yeah.
Which is not really performing.
Yeah.
And there is ghost lending goes behind it.
Yeah.
To make sure that the non-performing loan doesn't go crazy.
Yeah.
And there is not enough economic capital in the bank to take that NPL hit. So we continue to go through this process of where lending is done to show that the bank is working rather than actually working in the system. The economy doesn't get benefit out of that non-performing loans because they are not economically viable loans. So so although the loan to GDP ratio comes down, but you can't, so as a proportion of total it comes down, but the proportion of working loans relative to non-performing reduces even more because the non-performing stays there. So it creates more inefficiency in the system.
Yeah, I understand your question. So for NPL in the Chinese banking system, so it's a very tricky question. So maybe the official ratio of the NPL is just maybe 1%, so no one believes. But I think, truthfully, I think it's just maybe it's better than before because right now the housing price is very high. You can see the Chinese banks, their main assets is connected with the housing price. So housing prices are coming up in the tier 1, tier 2, tier 3, tier 4 cities. So housing price is very high. So So with this kind of housing price, the NPL is not so much. So this is the reality. But the risk is that when the housing price coming down, so maybe the NPL will coming up. So this is the problem in the future. But I think this time, I think the government they began to find this kind of trick. So in the past, we only pay attention to the GDP. The GDP is with the demand, so we put a lot of money in the investment side, so to push the GDP growth. And also, in order to push GDP growth, we put a lot of money. So this means we create a problem even more in the future. But this time with this kind of supply side reform, so it's quite interesting. With this kind of supply side reform, for example, in the steel industry, we cut the supply. And the outcome is very good. We can observe that the steel price are going up. So even now, maybe we began to do the financial deleverage and the demand began to slow down. But the steel price, after some drop, the price is still 2 times than last year. So this means this kind of steel company, they can still get profit. So I think this time it's not like before. We only pay attention to the demand side. We began to do the supply side reform. So even maybe the GDP growth will slow down. The profit is not so bad. So I think this time, maybe the NPL problem is not that with the drop of the growth, it will be up. I think we should look into the details of the assets carefully. Yeah. So it's different with the cut of the supply. So I think if only our profits are stable and the people have jobs, so maybe the GDP growth rate you need a lot to pay attention to. If we're looking back into the last 1.5 years, the GDP growth rate is stabilized at 6.7%. So people don't believe it. So you can never say a country, the GDP growth rate is stable. So I think people don't trust this number, so you don't care about this number. So we can make that by the Statistics Bureau. But the truth is that we began to reduce the supply, and we began to pay more attention to the profits and pay more attention to the jobs. So this means the banks, their assets maybe are not so bad compared with before. Yeah. This is my answer. Yeah. Okay, maybe we can talk about that in the private time. Yeah. I think the time is enough for me. We have this panel session. Yeah. Okay, thank you.
So now let's welcome our panelists to come to the table.能讲就用英语讲啊，不能讲我那个翻译一下。我们随便做。对对对。Yeah, we will have a 5 minutes break, so you can get some drinks, and we will reconvene.
So we will start the panel section. And right now, the 4 guests are all from Chinese mutual funds. And I will introduce. First one is Mr. Li, is from our Haitong asset management subsidiary, and he's the CEO, and he has a lot of money. Yeah. About 800 billion RMB total AUM. Yeah. The second one is Mrs. Zhang is from the Guangfa Mutual Fund. Yeah. It's also the 10 biggest mutual funds in China. And the third one is know-how in the Southern Asset Management Fund in China. And the last one is China Asset Management Forum. It used to be the largest one mutual fund in China. So this is our 4 guests. All are the other 3 are our asset manager. Yeah. So our first question is about the Chinese economy. So I will start from Mr. Li. So how do you view the Chinese economy? So where is the risk and where is the opportunity, and in the short term and in the longer term? So you can speak in Chinese, and Mrs. Zhu will translate. So if you can speak English. Yeah. So 你就直接说吧。对，他中文就不用翻译，就因为题目我给你看过，
问题就不用翻了是吧？
对，你直接讲。
这个首先应该说是你是短期看好与否是吧？
短期和长期怎么看？
长期看好与否
在哪里？
就短期是看好的，这个中国经济是看好的，长期也是看好的。这个首先那个大概的一个分析视角，就是看中国的经济总量呢，这个 GDP 的增长还是非常高的，而且还有这么6.7以上的这个高。然后看区域呢，中国主要的这个市场化的省份的 GDP 的增长都在7.5%以上，比如说广东、江苏、山东、浙江这些地方都在7.5以上的 GDP 的增长。第三一个呢，就是说中国主要的一些市场经济的这个区域的民营企业的问题呢出清和正在出清。比如说山东是正在出清，像浙江、江苏、广东，它的经济的发展基本上已经出清完毕了。所以说，无论是短期还是长期，这个经济都是看好的，这是毫无疑问的。然后呢，这个风险和这个机会，要说风险呢，觉得可能去产能、去杠杆对一些行业呢，确实是风险还是比较大的。比如一些环污染的产业呀、过剩的产能啊，可能没办法转化，这些产业还是要淘汰掉的。然后这些公司的风险还是比较大的。机会呢，其实是特别多，中国的机会还是有很大的机会。最主要的机会呢，还是在消费的升级品质的提升，还有养老这些健康养老这些都是很大的机会。当然，在这个结构调整的过程中呢，一些行业领域里边的优势的公司的这种规模效应也是很大的机会，特别是在权益投资上面。
So the question is mainly about the view on China's economy. So Ms. Li is optimistic on the outlook of China economy both in the short term and also in the long term. So overall, GDP is still growing at about 6.5% growth. This year, first quarter, 6.7%. And in certain big provinces like Guangdong, Jiangsu, Shandong, Zhejiang, all the big provinces, we see GDP growth at above 7%. Of course, there are risks and challenges and opportunities. So in challenges, we see the challenges in some sectors. Overcapacity problem is still there, especially in the cyclical sectors, coal, steel sectors. And also another issue that, as Dr. Zhang has mentioned before, is the deleveraging problem in the whole financial sector. But as an equity investor, we see opportunities in a lot of other sectors, for instance, like a consumer upgrade, like the improvement of quality in all different kind of consumer goods, in the healthcare and also the older people care economy. So we see a lot of investor opportunities as an equity investor. We also see some problems in some local private companies in Shandong where there's problem of over sort of capacity. We see some local, especially private companies facing some sort of problems. But we think that in certain big provinces like in Zhejiang, Jiangsu, Guangdong, where there's a lot of private enterprises, we see that with some companies going bust, we see some new companies emerge. So overall in the private sector, we think there's risks, but there's also opportunities.
So Mr. Li is very bullish on the Chinese economy. So we pass the question to Mrs. Zhang, and she is from the Guangdong province of China. So I will ask the same question, that how do you view the Chinese economy, especially how the Guangdong province, because you live there. So where is the opportunity and where is the risks? Yeah.
觉得短期我相对中性一点吧，我比较同意刚才这个江总的这个观点，就是短期的库存周期已经就是经济增长速度有一点见顶回落，而且我们看到之前的一个增长呢，跟这个房地产去年非常繁荣相关。但是我们知道房地产本身它是一个利率敏感型的行业，那么现在在一个整体央行的货币政策稳健，而且就是说这种利率，特别是贷款利率、房地产的这种它的一个贷款的利率和这种房地产的首付款也在往上提，所以我们相信就是地产的有相关的，不论既有限购政策，又有相对的我们的金融政策的双管齐下吧。我们认为今年的这种地产的泡沫应该是说见到一个就是说比较高点，其实数据上也是比较清楚的，所以我们感觉这个经济就是说短期是比较中性的。当然它由于是一个政府主动的解杠杆，而且是采取了这种限购的政策去抑制房地产的泡沫，所以我们认为它这个市场更多的不会说有一个价格的有一个这种下滑，而是说更多的是一个以时间换空间这么去走，所以这是一个就是说中短期的一个观点。那么对于广东省呢，其实我们也确实像没有那么多一手的这种经验嘛，可能还是了解不是那么够。但是从我感觉，就这种外向型的，完全就简单的外向型的这种经济模式呢，确实是有所降温。而同时呢，广东一些民营经济，它比较有活力的民营经济呢，也成长出一些它从简单的这种制造业，向着就是说自己的品牌、自己的就是提高它的这种生产模式啊和利润。比如说像我们叫什么奥飞云歌，它这种完全它生产模式也完全有些变化吧，这种产能的这个升级。所以我对中国经济呢，我也很同意刚才李总的这个观点，长期我们还是看好的。它主要是一个结构的转变，特别是说从你简单的一个扩大再生产，从一个追求规模，向一个就是说追求效益，向一个就是说产业链延伸和这种升级的方向发展。
So I am a little bit concerned about the short-term economic conditions, but I'm also optimistic in the long term. A lot of the focus has been in recently on China's property market, where we see that the government is rising the mortgage lending out rate, is increasing the down payment, try to cool China's property market, which we think is the right thing to do. and a lot of the concerns is on the burst of the China's property bubble, which I don't think is going to happen, but we are thinking that the property market has get a lot of tractions and the government is taking a lot of measures trying to cool down the market. Talking about the economic conditions from Guangdong province, what I observe is that a lot of the private enterprises there are transforming their business from a more sort of Guangdong used to be a very export-oriented province where a lot of companies focusing on business in manufacturing and export. Where we see the change is that a lot of private enterprises are doing sort of the product upgrade where they become a pure manufacturer to a brand maker, and they are upgrading their business model to a way that is not so much reliant on export. So we think that from Guangdong, an angle looking at China's private economy, a lot of the focus has been, transforming from an export-led manufacturer to a more sort of brand recognition, to an upgrade to their business model. So that's my observation.
So then we will pass the question to Mr. Law. And for the rest two guests, so we ask you must answer in English. So how do you view the Chinese economy? And Mr. Law is a strategist in China Southern Fund. So I know he is very skilled in answering this kind of questions. So this time, Master, you answer just honestly. Yeah.
Okay. Thank you, Mr. Zhang. Thanks, Haitong. Since I'm a stock analyst here, so I'm not an expert on the macroeconomy. But please allow me to share my point of view on this. So first, generally speaking, I think the Chinese economy is entering something called the new norm. See, the GDP growth rate is from 12% in 2009 to about 6% now. And I think it's safe to say the economy is still growing at the 6% annually for the following couple of years. And since Chinese economy has been the second largest, just following the USA, so the 6.5 is very, very fast growth. So there's lots of opportunities here. But we should focus on the structural change of the economy. Since I say 2013, the consumer sector as a whole has been the major contribution to the growth of the economy. We're not saying the consumer sector is the dominating factor, but is the major factor here. So you can say, as the consumer sector is growing faster than the investment one, so you can say the Chinese economy has shifted from an investment-driven to a consumer-driven economy right now. So if the GDP growth rate is 6.5, and you can see the consumer sector grows at about 10%. And some companies can grow at 20% also, or above, for many years. So there's a lot of investment opportunity here. And as for the risks, I think we're talking about housing price. Yes, I admit that the housing price is probably a little bit high in some tier 1 or tier 2 city in China. And if the housing price drops too quickly, it will be causing a problem. But I think the government worries as much as we do. So they issue many regulations to ensure the market won't crash. And good thing is, as the time goes by, the population will change to favor the market. Because now the population who demand the house is very high proportion of the total population. And as the time goes by, the demand for the house will go down and the supply will stay stable. So time will solve the housing problem. So I'm happy to see that. So I don't think there will be very, very serious risk here. And if the government control the risk, it will be okay. So that's my answer.
Thanks for Mr. No's speech. His two views. First is that the consumption or the consumer section is very good. And the second is that he thinks time will solve the problem in the housing market. The last one, we will pass the question to Mr. Zhu, and he has studied abroad. And he is from the middle province, the Henan province of China. So I want to ask you how you view the Chinese economy. Yeah.
Okay, Thanks. I'm quite neutral for the short term because I think Chinese economy is in a period of transformation. Some people put the starting point at 2009. Some people put it at 2012 or 2013. So if you do an international comparison, that it's the same thing happened to other economies as well, such as Japan and South Korea and even Taiwan. So they all grow very rapidly for decades, and then at some point they have to slow down and to adjust their structural problems. So we think it usually takes them like anywhere between 7 to 10 years to finish that transformation period. I think if you put the starting point for China in 2010, then I personally would look at 2020 as the ending point of this period for China. So with that in mind, I think I'm quite neutral for the next 2 to 3 years. Being neutral means that I don't see a collapse in Chinese economy because the government has a lot of resources and measures to really support the economy. But I also don't see fast growth to come back in China anytime soon. So I think that 5 to 6% is very decent for the size of Chinese economy. So I think it's going to put China in a very in the class of fast-growing economy as well. So to sum up, is that I think the next 2 to 3 years we still have to bear with the lukewarm situation in Chinese economy. That is, it's not going to go very high, but there's no the likelihood of disastrous scenario is very slim. So that's pretty much my view.
Okay, thanks, Mr. Zhu. And he thinks the Chinese economy will be neutral, will be stabilized at the right low speed. So the first round we talk about the Chinese economy. So maybe some are very bullish, some are neutral, but never. So I think still we have hope in the Chinese economy. And right now we will come to the second question, and I will especially ask about the Chinese stock market. So first we start from Mr. Ni. So how do you think about the opportunity in the Chinese stock market, especially in the Asia or in the Hong Kong market? So where is the opportunity? 就是 A 股和港股的股票机会。
就是港股今年以来表现还是非常不错的，但是应该也是说它也是中国内地很多或者源于内地的业务的上市公司的表现较好的结果。国内市场呢权益不是太好，主要体现在创业板不是太好，它的下跌幅度还是比较大的。如果没记错的话，年初到现在有10几。但是说呢，沪深300这样的一个指数呢，其实还是没有下跌，好像有微微的上涨，大概23%的上涨。所以从这样看呢，应该说中国的市场呢，好像更有效率了，也或者是逐步的有效率。那么说，国内市场的机会也是有的，也是有的。比如像，既然看好这个中国的这个宏观的经济。当然也会涌现出更多的这个有投资价值的企业。从我们这个投资的角度呢，我们一般是自下而上的去寻求一些好公司。我们对好公司的定义呢，特别是这几年，更加侧重于公司的治理是透明的，然后它的这个利润是有规模的，还有它在行业中呢，应该是相对是优势的公司。中国的这个优势的行业优势的这些公司的这种规模的效应，或者是它的溢价呢，其实还没有给，这也应该是我们的一个投资的机会。就这些公司可能在未来的消费升级、产品质量提升上边有很好的这种效应，但是它在投资端的表现还没有给应有的溢价，甚至还是在折价。那么随着市场效率的提升呢，那这个应该是有一个很好的投资的机会。那当然也有一些很多新的这个产业，包括科技的应用啊，这在中国这么庞大的这个 聚集的这个人群的这种市场特征上呢，还是特别好用的。比如一些物流啊这些产业，这些新兴的这个包括一些科技的应用，机会还是非常大的。所以说，既有优质的蓝筹的一些公司的溢价的应该的体现，也有一些成长型公司的会有一个脱颖而出的表现。那么这样看呢，中国权益市场的机会呢，还是非常乐观的，特别对于机构投资人，这几年一些问题公司和那个治理结构的改善，其实也把这些不确定性呢在降低，就是权益市场的一些相对不规范的一些在降低，一些炒作的问题啊，一些这个并购的一些问题啊，一些不该有的这个估值都在回归。那这些呢，也是机构投资人避免投资风险的很好的这样的机制。所以说，无论从机制上、现实的投资标的上，权益市场都还是非常难得的这个机会。
So, talking about China's A plus H share stock market opportunities. So as you probably already observed that H share market performed quite well this year to date, while A share market not so good. China's median Chinex board dropped around over 10%. But the blue chip CSI 300 stocks performed relatively okay, up 2-3% this year to date. So which shows that China market is getting more and more efficient with the growing number of institutional investors in the market. So we as a firm that look at bottom-up stock picking opportunities, where we focus on companies with good corporate governance, with scalable revenue and profit, and also sector leaders that currently some of them still we don't see a premium on these sector leaders, which we think they should have. Of course, with the sector China growth stock, sectors like new technology, new logistics, there are opportunities in picking interesting stocks in these kind of sectors as well. So last thing I wanted to mention is with the growing number of China's institutional investors, a lot of the worries that foreign investors have on the China market about transparency, about corporate governance issues, and some of the issues has been improving, some of the problems has been tackled. So we still very boom in terms of the opportunities in China's equity market.
So Mr. Li is bullish on the blue chips. So I assume that you believe in blue chips, and still you think there's opportunity. So we will jump to Mr. Law, and I know you are a strategist, and so we are making that question a little bit harder. So between those blue chips, for example, the banks or the real estate company, and also those technology company and consumer goods company. So which one you prefer the best? Yeah, so you can recommend the exact industry, which industry you think is the most opportunity will be. Okay.
Okay. So Dr. Zheng asked me to give you a sector that I see the most opportunities here in China. So generally speaking, let me give my point of view on the general Chinese stock market. So if let's say the index is determined by earnings and the valuation level, that's two factors determine the index. We don't see any bullish index here because the earning is in pressure and because the interest rate is going up and the valuation is also in pressure. So we don't see a beta-driven bull market here in China. But also, we can see, if you can see structurally, there is actually a bull market here. Because if you put every leader of the industry together and form an index, you can see the index keeps going up from the last quarter of 2016. And among all those industry leaders, if I can choose one sector, I will probably now choose the smartphone chain. Because, see, the smartphone is a consumer good here all around the world. Everybody uses the smartphone. And the smartphone total growth is about only 2 or 3% now. It's a stable market. But during the past couple of years, this industry has been shifted all around the world, from the USA, from Taiwan, or from Europe to China, to mainland China. So if you see mainland China smartphone chain industry, it's about the industry grows as 20 or 30% a year. So it's a very, very high growth speed. And some Chinese companies have been developed a technology and at a low cost. So this kind of companies will keep gaining market share. And this company's profit is growing at about 40 to 50%. And right now, because some of these companies is at the Chinex board, or say the startup board of the Asian market, and because of the crashing of the internet bubble, the valuation is relatively low. It's about the trailing term SP is about 30 to 40. But given the perspective that the compound growth rate of the following 3 years will be 40 to 50 annually, I think the valuation is very cheap. And if you can form a portfolio, you choose the right company to form a portfolio here, I think this portfolio will behave very, very good in the following years. That's
okay, thank you, Mr. Ni. So I think you are quite different with Mr. Ni. So you believe that for example, the smartphone business, maybe this kind of industry, although the company is not so big, but the industry is very booming. So this kind of industry, even small company will have very good performance. So this is our guest, their view about the stock market. So we will change our topic to the bond market. The bond market, so the rest two guests are all the bond manager. So first I will ask Mrs. Zhang. Right now we know that the U.S. began to tighten their monetary policy, and also in China the PBOC, they are doing this kind of financial deleverage, and the interest rates are going up. So how can we invest in this kind of environment? So how do you view the opportunity and the risk in the Chinese bond market? Yeah, so this is the question. 就怎么来看债市的风险和机会？
其实在这个时点上，我们更愿意多看一看债市的机会，因为确实有很多风险点，但是这个市场从去年以来，这个收益率已经上升了，我觉得接近200个 BP 吧，170、180个 BP 这种收益水平。那么我们的这个具体这种风险到底有多大？因为我们债券市场，你的随着下跌，随着风险的释放，它的投资价值就会越来越大。那即使说我们考虑到国际市场美联储的这种加息和有可能未来的缩表，甚至就是说欧元区的这个货币政策变得更加中性，那么在接近200个 BP 的这个上升幅度，我们觉得在某些品种上，尤其是就是说中短期品种上，应该已经相当充分地体现到这种不利的影响。因为我们发现目前的一个中国宏观经济的，无论从通货膨胀，还有中国就是宏观经济的高点，可能我们已经看到了，短期内也不会说有更大的通货膨胀和这种上升的逆向的冲击，所以我们在短端的这种收益水平，其实已经达到了很多企业比较难以承受的水平。而且从相比起那个债券和这种贷款去看，我们债券资产也具备了一定的吸引力，所以我们认为在这个时点上，在一些就是说短端的品种上确实是有投资价值，但是另一个角度去看呢，就是市场的调整 可能仍然没结束，既有国际的，更有就是说国内的这种监管的负面的中期吧，这种解金融杠杆的压力还存在，所以就是说你也很难去寄希望于市场会有一个短期有一个很好的一个表现。对，那么主要的我们所以这是我们对于就是说短期有投资价值，但是你说是不是说很快有表现也未必，而且我们就更肯定的就是说，其实可能我说短期的就是货币市场的收益高点，可能我们已经看到了，尤其是说去年年底，像我们货币市场的利率曾经冲高到接近10的这个水平，我觉得在任何的一个经济体，任何的一个宏观经济下面，我觉得这已经是一个相当高的一个高点，我觉得也不会说再有这种这么高的一个平衡，所以我们觉得短端是比较安全的，那么另外一点呢，就是说它解杠杆的时候，金融监管所导致的，就加强监管，去年是把所有的风险溢价都消灭所有的风险溢价。那么在中长期来讲，我们觉得这个风险溢价还是会正常化。作为债券的投资呢，我们也是很强调这个风险的管理，怎么样去规避这个风险。那么我们认为这个风险溢价，尤其是像有一些高风险的一些产品的话，它的风险远远的还没有释放完毕。当然我们相信在这次解杠杆之后，应该所有的产品，就是债券市场的那个投资品种都会有一个非常好的一个投资机会。
So China's fixed income market since the last quarter of 2016 has seen a major correction. So yields on average rise about 170 to 180 basis points. So at this point of time, we actually see opportunities in China fixed income market, especially in the short-term bonds. Last year, at a certain point of time, the money market rate hiked to 10%, which is very harmful to the market and which we think is really a peak of the market. So that's our view on the China's bond market investment opportunities in the short term. Of course, in the longer end, with China continue to deleverage on the longer end bonds, probably there are, and also in some risk parameters, some of the risk factors has not been fully priced in. So we don't think maybe in the immediate term that we are going to see a strong recovery bully of the bond market, but we think at this point of time there are more opportunities to watch on China bond market.
So to summarize, I think Mrs. Zhang is not so bearish on the bond market. So she believes that right now the short end of the bond market is quite attractive, but for the longer end and also for those credit bonds, maybe still we need some time for them to be attractive. So then we pass to Mr. Zhu. So you are also specialist in the Chinese bond market. So how do you view the opportunity and the risk in the bond market?
Thank you. So Dr. Jiang just now mentioned you advise your client to stay in cash, right? So, but my answer has to be different because if I put anything in cash, then I will be out of job. So, so I think it's in the sense that I agree with you that we want to be defensive at this time because the correction since last quarter last year is driven by the regulatory changes in China. So of the 4 major financial regulators, 3 of them have new leadership since last year. So the new leadership has very different agenda than old ones. I think that their main goal is to deleverage the financial system. So, so that actually explains the correction we have seen in the bond market. I believe the correction is coming to, so by some indicators, I personally think we are coming to the close to the end of the correction. So I'm kind of constructively bullish because I'm looking to opportunities to buy even in a long end. But on the credit side, you have to be on the short end because the curve is so flat that you don't get compensated by going long. So I think for investors on the credit side, you want to invest in commercial papers. If you can, you want to invest in CDs as well. So those are offering like about 4%, even 5% of returns. And so I think that's a very good opportunities when you play defensive at this moment. Also, if you want to be more aggressive, you can really get into some of the industries and you pick leaders in those industries. Even the industries itself is not so attractive. For example, steel and even coal industries with the capacity issues. But during the process of consolidation, there got to be some winners and losers. So if you get the winners, you get the industry premium, and you also get you also usually don't have those as much credit risk as it appears to be. So I think that's something for even more aggressive investors. So for rates players, I think we are getting close to the entry point. So 10-year Chinese Treasury is trading around 3.7% at this moment. It's actually close to my psychological level. So I'm actually looking to watch closely. If we have to put a timing, I think the timing probably is in the second half of this year, in the third quarter, because the fundamental economy isn't as strong as to support or to bear or to afford this kind of return yields or cost of borrowing. So this correction is really driven by this regulatory changes, and it's going to be a temporary movement, and it offers opportunities for investors who have dry powder at this moment. So for the risk side, I think you don't want to get into this long credit at this moment, because by historical level, I mean, if you look at the historical level, we are really not close to the median of this historical credit spread as well at this moment. So anything about 3 years, you're below, I mean, the credit spread is below historical median level, which means there's still room for the credit spread to widen on those tenors. So just to sum up is that if you do credit, you want to stay short duration. If you raise investors, there's good opportunities coming to you. Yeah.
So Mr. Zhu is quite bullish. So it's bullish or constructively bullish on the bond market. So right now, I think I have talked with some European guys. So if we compare these years together, so yes, our yield is quite attractive. Our 10-year Treasury right now is 3.7%. It's maybe the Mr. Zhu is about to come into the market to seize the money. So he just think not about the job. You are thinking about the bonus. Yeah. So he's bullish on the Treasury market or government bonds, but also still be very cautious on the credit side. Yeah. So this is about the bond market. So our final question is about the Chinese market. So we have established the Hong Kong Shanghai Connect. This is stock market. So we have this bond connect. So we are opening our capital market from stock market to the bond market with the outside world. So maybe sometime we have this Shanghai London Connect. So maybe. So how do you appraise this kind of opportunity? So if we open the door with outside the world, so you think this is time to invest abroad, or just to have more clients in the outside world? So how do you think this opportunity, or how do you think the RMB will be strong, will be weak in the future? 就将来怎么来看开放的机会，是往外面投资呢，还是到外面找客户投资国内？人民币是强还是走弱？ So just one by one. So from the Mr. Li first, yeah.
人民币呢，如果中国经济长期看好，这样的话呢，人民币大幅贬值的可能性就很小，逻辑上是这样说。但是中国的人民币应该说长期积累了这个长期升值，还是积累了一定的这个贬值的这种空间，还是有一定的贬值的空间。但是我觉得可能在未来一个很长的时间，人民币都可能在一个波动可能会加大，因为那个央行已经放宽它的波动了，波动会加大，这是一个判断。另外它的趋势呢，可能小幅的贬值也是有可能的，就是说它要去把原来多年积累的这个升值进行一个回归。但是又由于中国这个经济的长期看好，其实它的向下的空间又非常有限，所以初步的判断呢，有贬值的压力，但总体上大幅贬值的可能性是没有的。那从投资来看呢，其实我们当然像我们这样的机构，主要还是觉得国内的机会多一些，国内的机会会多一些。但是呢，就是随着客户的这个高净值客户的国内的这种发展和这个成长，这个海外投资的需求呢也是非常大的，全球投资也非常大的，所以有可能未来的几年从资产管理的角度呢，就是双向的都会比较繁荣，所以这也是我们来伦敦的一个主要原因了，也希望我们这个投资相互交流。但是人民币我们还是看好的，很大幅贬值的可能性也没有，像很多公司还会受益，就是说这个贬值的预期差没有实际的贬值的情况没有预期的那么大，反而很多公司还会反向受益。
So in a very brief summary, we don't think that RMB is going to depreciate in the very long run, but in a short period of time, we think that there's also some depreciation pressure. On a yearly basis, a certain percentage pressure on RMB depreciation. In terms of China opening up and our view on the overseas investment opportunity, so as at this point of time, we see more opportunity in terms of investment opportunities into China. But with the growing wealth of China, our clients, we are also observe that our clients has more and more interest of investing in the global markets. So that's why we are here in London and to communicate with this industry about growing opportunities in the global market.
So there's a little secret that Mr. Li has about 800 million USD quarter in QD. So this is why he come here and last year to US. Yeah, so it's a lot of opportunity to with him. So QD quota is the biggest one in the security form. Yeah, and I will ask Mrs. Zhang, and so you are among the 10 biggest mutual fund in China. So how do you think about the opportunity in the domestic and abroad? So why you come to London to share with your opinion with everyone here? So how is your view? 就你怎么看这个交流的机会，就是全球的这样一个机会啊？
我 我觉得从资产管理的角度，双向都是必要的。那么就是至于说我们怎么去配置的话，那看哪个市场给哪个风险定价是不是合理。如果在目前的市场环境下，我觉得短端我更愿意配在国内市场上。国内市场的短端的绝对收益是非常高的，而且它的那个波动性确实很大，所以给了主动管理很大的空间。比如说，就是说去年当时你可以说1个月内你可以抓到10%的收益率，如果你做的不好，可能也就是个4%、5%的这种收益率。所以你对于就是即使是短端这种流动性的管理，也给你主动管理非常大的一个空间。那么另外一点呢，刚才也提到这个信用风险的问题，其实国内对于高收益债的这种信用溢价是非常不足的，而且对于高收益的那个债券的这种条款的保护也是非常不足的。那么这相比那个国际市场上来讲，它的就是说，如果说我做一个那个债券的一个组合的话，我更愿意把我的高收益的那个头寸去配置在一个国际市场上去做。那么至于如果说是贬值的那个角度呢，我也很同意刚才那个李总的一个看法，因为就是说我们觉得中国的现在的从生产的一个能力来看，还是有相对的优势的。再从我们的这种经常账户的这贸易顺差也可以体现出来。如果我们贬值的话，那么这种的那个贸易的优势就会更强。那么而且就是全球的市场呢，其实经济复苏并没有那么强。如果说汇率的问题，肯定是一个双向的一个问题。像中国这么大的一个经济体，它如果说要有一个大幅度的贬值的话，那肯定是要有一个对手方，一个比较大的一个经济体作为对手方。那么我们去看全球，就是说全球没有哪个经济体有这个能力，也有这个意愿作为中国那个贬值的一个就是说大的一个对手方。所以我们认为就是说贬值其实空间不大，但是其实是有压力。为什么呢？也是因为我们作为资产管理的角度，大家也有一个全球风险分散化的一个过程，而且中国人越来越多的大家的这种留学呀，然后那个旅游啊，这种需求也是非常大的。所以我们觉得就是说这种贬值的压力吧，就来自于这种一些全球化的这种，它这个压力还是一直存在的。
Okay, so I'll do a very brief summary for the sake of time because we have two speakers that are going to speak later. So in summary, we think that at this period of time, in terms of the market investment opportunities, especially in China fixed income market, we still see a lot of volatilities. And as a fixed income investor, we take opportunity in a lot of volatility in the market. Take advantage of the volatility in the market. So in the credit bond, we see opportunities in overseas, especially long-term credit market, where we see that in China there's not enough risk premium in the long-term credit bond market at this point of time. I agree with Mr. Li's point of view in terms of China do not have a long-term pressure of RMB depreciation, so we are not very worried about that. Because obviously we don't see that there's a counterparty, another country that will be in such a station to benefit from and to be in such a strong economic condition to appreciate its currency strongly against RMB.
So Mrs. Zhang just recommends us to put the right money in the right place, so everywhere has its own opportunity. And so we pass the question to Mr. Law. So how do you view the RMB internalization? Where is the opportunity and risk?
First of all, because of time, please allow me to give you back the question about the currency, because that's far from my expertise, and I trust your judgment on this. And so I should focus on the opportunities here in China. First, my point of view is clear. I think the Chinese opportunity is far from the international opportunity. That's because, first, the Chinese economy has become one of the major economies in the world. It's big enough for big monies. And the market is also big enough. And it still grows at the fastest rate all around the world. It's 6.5%, and you can never see another economy this big to grow at this fast speed. So I think there's two major concerns when the foreign investor to invest in A shares, and one is valuation, and the other is regulation. First, they think the Chinese stocks are trading at a very, very high PE. So they don't think it's expensive, it's not cheap, although it's growing. And the second, they think the regulation here got some problems. They may have some concerns. In the 2015, the market crash, and I think that fears a lot of people. And I think at this time, because 2017, as we know, is a regulation year. We got a lot of regulations here in China, both in the economy and in the stock market and in the insurance market, banking market. All this market, we regulate because we are prepared to open. And before we open, we got to clear our problems. So the institutional investor, as us, not suffer from this regulation. The stock market is going down and the bond market is going down, we suffer from it. But I think for foreign investors, it's a very, very good opportunity. Because when this regulation is over and the market is being healthier, and when it's open, I think there's more and more foreign money will enter the market. And I think there will be a bull market in the following years. So I'm very optimistic on this.
Okay, thanks, Mr. Law. He's very bullish. He thinks that the regulation is helpful in the future for us to come into the market. So the last question is to Mr. Zhu. So how do you view this opportunity of RMB internalization?
I think in the short term, we don't. To be honest, I don't see any big chance to see RMB internationalization go forward at this moment, because obviously government is more concerned about exchange rate and foreign reserve. I mean, anything like RMB internationalization is actually opposite to any like capital account control and reserve management. So I think we actually see a stop, or like a pedaling back in terms of internationalization of RMB. So as is mentioned earlier in one of the PPTs, that all sort of reform and deregulation in China actually come in waves. So we see like big leap forward, then we have to see like pedaling back. So we're probably in the cycle of going back a little bit in terms of internationalization of RMB. So in the short term, I think RMB is still under pressure in terms of valuation. We can look at the basket. I think RMB still have some room to go even weaker against US dollar or against the basket. But we know that it's very difficult to forecast exchange rate. It's a function of a lot of things, right? If U.S. economy is not as strong as people believe nowadays, so the pressure on RMB will be much less. So it's very difficult to say. I mean, it all depends on, even there's a political issues in the U.S. So I can't put a very convincing forecast, but I think it's safe to say that in the short while, so long as Chinese economy is in this transitional period, and we think the RMB will be under pressure for a prolonged period of time. Even if you look even longer, because the demand for investing in overseas market is so huge in China. It's under control at this moment, but once you open up a little bit, people would want to diversify into global markets, and that's actually another source of pressure for RMB exchange rate. People want to convert to other currencies, so that will be a different source of pressure other than the fundamental economy to RMB exchange rate. So my view is that in the prolonged period of time, RMB won't be very, and you won't see much appreciation room for RMB. But I mean, it's going to be under control and under management. So it's going to last for quite a long period of time.
So Mr. Zhu is quite conservative about RMB internalization, but he shows us another way. So the money in China, they are willing to come in abroad. So this is an opportunity. So this is why Mr. Li have this QD quota. Maybe you will have your own QD quota, so you can come abroad to find opportunity. So I think either way we have jobs. So thanks you all for your time. Yeah.
Thank you very much for a very informative and interesting panel. This is one of the key, we've had the MSCI decision announced for the change markets on the equity side. But one of the other key factors is obviously when the bonds are going to be included in the global indices, and that's likely to be much more significant and much quicker than we've seen for the equity side. So we're going to hand over to Sanjay Rao, who's the Bloomberg Barclays indices, who will tell us the considerations and also sort of what we can expect from your decision to include the domestic bonds in the market. You've got the mic there. Oh, yeah.
Hi. Can you... Sorry, is that okay? So hi, my name's Sanjay Rao. I'm the Bloomberg Barclays Index Product Manager for EMEA. I'm just going to give you a brief overview of the index family and some considerations of how we decide what new currencies are eligible, specifically with the inclusion with respect to China. So they say that a picture's worth 1,000 words. Effectively, this is a picture and 1,000 words, so hopefully you get double the value from this. But ultimately, this is an overview of the range of indices that we offer. Each box represents a segment or a segment of the investment community, and it basically allows them to define themselves into separate asset classes. We have, effectively, for the core bond user, we have investment-grade indices that cover securitized, corporate, and treasury indices, effectively where rates is the primary driver. For high yield, you have credit as the primary driver. You have inflation indices, you have convertible indices, which are looking at the hybrid debt equity switch. You have FRN indices that are looking at effectively credit hedged. So all of these different indices are built around the needs of a particular investment community. Ultimately, we could each box will give you the universe of bonds that are eligible for a particular group of investors. So if you think about it, ultimately we could have produced just one index with every single asset class, but that's not how the investment communities work. That's not how they see themselves. They've divided themselves into different segments. And that basically is a key distinction. When you see the announcements about how index providers have decided to on particular choices, it's always reviewed as the index has been decided and the decision is for investors. But ultimately, that's not how we view the process. It's ultimately a consultation with the investors to understand what exactly the rules of their investing are and to try and represent and reflect their index. We're not trying to define the market for them. We're trying to reflect what their choices are and give them the global consensus for that. So what is a global investor? It's slightly different from the standard US domestic investor. It's more heterogeneous. You have, if you think about it as asset managers, you have the tier one asset managers that have global reaches. They're in every single region. They trade every single type of bond. You have the mid-tier asset managers who are basically regional players, significant in a particular region, but maybe not the same infrastructure to deal with global trading. Then finally, you have smaller investment managers and also pension funds. Effectively, they're dealing with their assets in-house. They would effectively be sophisticated investors, but at the same time, they don't have the infrastructure of the tier one investors. They don't have offices in every single place, but they also have to deal with the issues that everyone has to deal with. Can you trade? Do your rebalancing trades at month end? Can you settle that trade? Can you deal with any custodial issues in a time zone that may be effectively closing when you're getting into work? So all of those issues have to be dealt with, and Global Investor covers the whole range of types of people. But beyond that, you look at the styles of investing from different regions. So if you think about the US, it has a long history of using benchmarks over 40 years, primarily as a reference rate for active management. So it's more something that they're using to show how they outperform. In Europe, they have a history since the Eurozone where it's taken up quite effectively, but that's primarily looking at benchmarks with customization. Because it's quite heterogeneous around Europe, they have different demands, different needs, and therefore they set up different styles of benchmarks. And the third largest group are the Japanese. Effectively for international investing, they're very strong on benchmarks, and their key focus is replicability, making sure that they can get the same return that the benchmark is saying that they should be getting in their investments. It's heavily passively traded. So effectively, you're looking across those three groups and those three styles to try and find a consensus of what it means, what is an acceptable investment for a global investor. And that's what we're trying to achieve, trying to understand that consensus. So how do we do that? We have an index advisory council. So for 20 years, we've been going and asking our client base what exactly they think about particular issues. Last year, we held them in New York, London, Hong Kong, Singapore, and Tokyo. And effectively, we asked them a range of questions. We have a set criteria that's published in terms of how we would define what is an eligible currency. We publish it, so the three main criteria are it has to be investment grade by two of the three ratings providers. It has to have a freely tradable currency and freely tradable and convertible currency, and it needs an established and liquid forward market. Now, effectively, if you some of those criteria are immediately obvious. Some are more nuanced and dependent on perception. So sovereign debt rating, China is obviously eligible. Market size is obviously eligible. But there's a range of other questions about the forward market. Onshore versus offshore, what's the liquidity of the two? What's the access for the onshore for a foreign investor? What's the basis between the onshore and offshore? Is it a freely tradable currency? I mean, the IMF comment that it is a freely usable currency. Is that the same as freely tradable? I think people raise the issues of is RMB stability the key focus of the government policy, or is it allowed to free flow? Questions on market liquidity. Can you trade the bonds? Can you trade the FX forwards? Is there a secondary market? Is it possible that you can effectively have rebalance your trades effectively? And then the question on capital controls. Is there any restriction on access to your money? Is there any question about the stopping of removal of your money? Any other restrictions like tax, withholding tax on the coupons or capital gains tax? What's the actual tax regime? How does this affect your investment? So effectively, we asked what turned out to be 100 investors globally, what they thought on a range of different questions addressing these concerns, and we took their feedback. And broadly, I think you can characterize it as, if you look at US and Europe, the key focus was on market access and concerns about repatriation. Can you get into the market, and at any point, can you get your money out of the market? This is a significant exposure for them. The questions that repeatedly come up are about yield, pickup, growth prospectus. That's not the focus. This is an international investment over 40 years. This is how they view the market. You need to make sure that you can access the market efficiently, and at any point you should be able to withdraw it. Beyond that, there were concerns about disclosure and transparency. We've heard a lot of comments today about there's a range of positive aspects to the Chinese market, but there's also a range of underlying questions, and it's not clear that the questions are being addressed in an open manner. So these things need to be addressed as well. For Japan, the focus was actually different. The focus was on, is the currency convertible? There were concerns about the banding. And then there's also the question on the FX forwards. Can you hedge their exposure? Ultimately, if it's included in the indices, they want to be able to replicate it exactly as it stands within the index. and they need to make sure that there's no restriction on that. So effectively, having discussed all these issues and tried to gauge the feedback, what we had at the September Council and the October Council last year was a clear indication that China was a very interesting market, and it was definitely something that everyone understood in the long-term horizon belongs in a global fixed income benchmark. The questions remain, though, was this the right time? And what we saw was that there wasn't an engagement currently, and there was a range of different issues that they needed to address. I think that I'm not sure if people have mentioned it before, but the QFII, RQFII, and new structure, each one of these, any person that's claimed access has had to deal with the legal restrictions on it and then move forward. The question is there going to be a next stage beyond this? And so what you ended up with was a consensus that what we should do is basically build a parallel index. Our standard index plus China, which allowed clients to then engage with what the index would do, what the asset class would be, have clear understanding of what the analytic measures are, and then have a conversation with asset owners. Bring that conversation to suggest, well, this is what your allocation would look like with China. What does it mean to you? Is this an opportunity that we should be looking forward to? And as we were saying previously, that it's a consensus. So obviously, given the range of different people involved, some people will actually be will not have completely been convinced by the idea. So this would give the people that are ready to have that first mover advantage. But also, it means that the sense that we are moving in a particular direction is something that allows investors to move forward with their planning. It allows them to start thinking about the process of what they need to do to adjust their portfolios on both the investment and the operational side, which is going to be a significant issue for them. Just to close off, to give you some idea, the majority of the currency inclusion criteria that we use is around, so this is the global aggregate, is around adding small countries. We've done the big countries. The expectation is that your allocations are now around 30 basis points. As it says here, I think 16 currencies of the 23 have less than 1% exposure. So this is a significant move. We suggested putting just global treasuries and policy banks in as a first stage, and that would still give you a 5% allocation. If you think about ourselves as one of the larger players in global investing, even if you combine us with the Citi Wigby, you're looking at something around 2.5 trillion, possibly more, looking to use that as a benchmark. Ultimately, that would work out at something like 160, 180 billion of passive or of flows coming into this particular market. So it's that type of decision that has to be made on a reasonable and rational basis rather than a short-term view of what's likely to happen in the next 6 months or a year. So I think this is why this is a substantially different and more difficult conversation than you would normally have with a range of other criteria, because this is, effectively the fourth largest currency entering into the market. Hopefully that was short enough. I think I was trying to catch up some time on this, but thank you.
So we can take one question if you have. Otherwise, we'll go to the next session. So please stand for a while. Do we have any questions here?
Hi, thank you very much. That was very insightful. Just a quick question regarding the CNY and CNH. Does Bloomberg, I guess, do you know what the volume is for CNY or CNH more, which is offshore, according to your system, and what is the trend? Do you see any increase or decrease in the future, just from your statistics perspective?
So you mean the actual exposure of CNH?
Yes.
I think it's relatively stable. CNH has been part of what we classify as the China aggregate indices and a range of other indices. We haven't seen the exponential growth that you would expect. I think the expectation now is the focus is on CNY and when that would be eligible, and therefore that would be the significant part of the exposure.
And what's that volume? What's the size of that?
Of the CNH or CNY?
CNY, because that's
CNY on, if we just take the global treasury and the policy bank, it's 5% of the, I think it's 45 trillion in there.
So 2.25 trillion.
Something like that, yeah.
And do you also have the stats for CNH?
We do, yes. So effectively this is the range of metrics that we're actually publishing now. Yeah. So I think this is part of that conversation that we want to aid, so people have a clearer understanding of what the impact of each one of these choices are.
And do you have any idea how big of a portion London gets in terms of kind of that exposure, or is it specific to the locations? You know. Yeah.
Well, so I mean, we don't break it down. We don't track the AUM that way. But functionally, you can see that most of the most of the US mandates are run through London, and so a lot of the Europeans are. So if you think of it as 1.5 trillion on the global ag, something around that region, I think you'd say, we don't have the exact figures, but I'd say 50-60% of that.
Okay, thank you.
Thank you. Thank you very much. Now we will start the last session. We will invite Jing, who has our QFII business, to talk about China's capital market opening up and evolving.
So, good afternoon. Sorry that the time is quite limited, and it seems that the audience stay till so late are all true friends. So today my topic is China's capital market opening up from a broker's perspective. So I will first like to look back the footprints of the China market opening up during the past 15 years, and then I will try to summarize the investment characteristics of QFII and RQFIs, and lastly we'll try to figure out whether there are any changes or development during the opening up with regard to the market infrastructure and the regime. So QFII scheme was introduced to China in year 2002. That was a milestone in the opening up history in China. At that time, I was a fixed income trader at Haitong Securities, and just like a few other visionary local securities houses, Haitong decided to start the QFII brokerage business at the very beginning. And I was luckily selected and transferred to the QFII service team as a QFII sales trader. So I luckily witnessed and experienced the whole process of the opening up in China. So the first batch of QFII players, well known as UBS, Goldman, Merrill, etc., they were lucky too. So they gained a lot of profit in the early years, especially with the non-tradable shares reform in China. 4 years later, QD scheme was introduced to China as well. But unlike the first batch of QFII, first batch of QD players, they just encountered the world's financial crisis at the early years and suffered a lot. So that painful experience also made domestic investors even doubt about overseas investment, and the confidence didn't recover until recent years. So after QFII and QD, there were a lot variations of cross-border investment vehicles such as RQFII, RQD, QFLP, QDLP, QDIE. So and also Shanghai Hong Kong Connect and Shenzhen Hong Kong Connect were announced consequently. So there are a lot of like more and more channels for investors to invest in primary market, secondary market, private equity market, etc. And also since early this year, PFM business was opened to foreign institutions as well. That means foreign institutions, they can like conduct their PFM business directly in China by applying for the PFM license by like setting up their QFII presence at China. So that is like equity part. In terms of a bond part, CIBM, which is the major bond trade marketplace in China, on which like 95% of the bonds are traded on, was opened to foreign institutions, actually opened to all types of foreign institutions since last year. And the Bond Connect is expected to be announced within this year. So the market is really open. So this is a general picture of the development of QFII and RQFII scheme. I'm not gonna elaborate all the details, but it's obviously there's a few times of like big evolutions. The trend is that for sure lower qualification, more investment vehicles, and more flexible quota management. So this is the current status of the opening up. Regarding QFII and RQFII, by the end of March this year, there were over 300 QFIIs with total quota over $90 billion and more than 200 of RQFIIs with total quota around 540 billion RMB, and their total asset, including equities, fixed income, is around $120 billion. That is not a very big proportion in China market. It accounts for only like 2% of the total asset, total market value in China in terms of equity. And regarding the mutual market access, the stock names in Shanghai stock pool has taken up 93% of the total Shanghai market cap, while the Shenzhen stock names, the stock names in the Shenzhen stock pool has taken up to 71% of the total Shenzhen market cap. So the mutual access has been a very good supplement of QFII and RQFII scheme. Regarding the bond market, in CIBM market, there are around 475 foreign institutions has got the access to CIBM by the end of March already. So I believe with the open of Bond Connect, the market will grow much faster. So next part, I will try to summarize the investment characteristics of QFII and RQFIIs. They still allocate like around half of their asset on equities. So in terms of equity investment, they still prefer large caps just as we expected. And all of the top 10 stocks, they overweight, rank in the top 5 percentile in overall Asia market cap. And sector-wise, they still prefer those traditional sectors such as banking, pharmaceutical, food and beverage, home appliance. And it turns out that they, QFII and RQFIIs, they have like lower turnover and also higher return. According to undisclosed information, the average turnover of QFII and RQFIIs is around 4 times per year versus 12 times of local domestic institutions. So with regard to the returns, we got a number that from 2003 to 2016, QFIIs, they have realized a compound annual return of 16%. So that is, I think that is quite an amazing figure. Due to the constraint of data source, we cannot get the figure of domestic institutions during this exact same time period, but we do find the data in the past 10 years that onshore mutual funds, they just realize an annual return of only 2.9%. So in terms of the fixed income investment, QFII and RQFIs, they allocate almost 93% of the fixed income investment on China's government bond and financial bond, only like 7% on the credit bond. I think the reason behind probably is the distrust of local credit rating. So I think with the global credit rating agencies being allowed to get access into China, the situation is going to change. So lastly, I will try to figure out whether there are some changes or improvements during the opening up with regard to the market regime. Firstly, for sure, the market value. So we noticed that during the past 15 years has achieved 15 times of expansion of the market value. So that is in breathtaking growth, I think. And secondly, there are more and more vehicles and instruments were introduced to China, including margin trading and short selling, including index futures, bond futures, and index options, CDS, IRS, etc. And thirdly, and I think very importantly, the investor structure has been optimized significantly. We could see from the upper right chart, this is the percentage by free float market cap. So we noticed that the professional financial institutions, they have their proportion of free float market cap has reached 31% in the total market cap. If we just look at the proportion of retail investors, we could see that the latest figure is 43%. But guess what was the figure 15 years ago? That was 70%, over 70%. When I first saw that figure, I also was quite surprised. Oh, okay. I was also very surprised. So yeah, it's a very good evidence. That's a good evidence that China's markets investor structure has been optimized. And from my personal observation on the residents and also the high net worth people's investment characteristics, I think could also verify the result. They tend to allocate more of their asset on the private equity products and also those segregated account products rather than investing in the individual stocks by themselves. I think that is why China's PFM business has been growing so fast in China recent years. The total AUM of private funds, including those private equity funds, has exceeded the AUM of mutual funds actually. So lastly, I would like to look at the regime improvement. Actually, there was back and forth for sure, but we still witnessed a few improvement of the market environment. For example, the suspension, the improper suspension actions have been regulated. And for example, the information disclosure rules have been modified to a more healthy one, and also the refinancing rules have been optimized. So this is MSCI inclusion. MSCI is strongly expected to include China A within this year, so maybe in June. So I'm not going to elaborate details because the constraint of time. So I think maybe that's all of my presentation for today. Hope it is interesting and helpful. So if you have interest in the material, you can feel free to come to me for the soft copy as well. So thank you. Thank you a lot.
Okay, now we invite Florence Lee, who is very experienced in the QFII and the CIBM business from HSBC, to give us a speech in terms of from a security service point of view, how they view the market opportunities.
Okay, first of all, I apologize that no PPT. And we have an English saying that you save the best for last. But as a responsible speaker, I would say save the shortest for the last. And make sure everyone will be quite quickly, then we finish this event and going back to work. And I want to share with you something. I think a lot of experts today, very good information, very comprehensive from all angles. You have fund manager, index provider, trading side. For this CIBM market, I want to share with you something is about from a European investor's perspective. I think today we have a lot of our experts is on the ground from a China perspective to share with us. No doubt, China market is opening like a fast train. And 3 years ago, we're saying that cross the river, touching the stone step by step. But now I would say it's windsurfing or a jet ski. Then you're gone. Something I tell you today, maybe 3 months later, is a completely different game plans. So China market characteristic, everyone knows, a very young market, like the CIBM market, the bond market is only just about 20 years. But it grows exponentially. It's like a very young boy, but suddenly grow to a giant, 6 feet tall now. And also, this market is really, really dynamic, because the background is Chinese government have a determination to open it and then to welcome all the foreign investor. So because of all these characteristics, sometimes for foreign investor will find it difficult to navigate. And also the second thing is, I always having this question, $1 million question, should I do it now or later? And something I do it today, is it 6 months later, there will be something better to come up? You always will be facing this question if you want to invest in this market. My personal experience and my suggestion is talk to the expert, talk to the locals. They will give you more perspective than just we sitting here in London or in Europe to looking into China. This is very important. And then for people like in Haitong or a lot of the banks in the market, then index provider, they can share with you a lot of the local information. That is very important when you determine your China strategy. Okay, there's a few things on the CIBM market opening as well I would like to share with you. Since last year, the Chinese bank, PBOC, has further opened up. Now it's basically a lot of the foreign investors, most of the financial institutions will be eligible to go into China. Some interesting figure, if you compare end 2015 to end 2016, the number of registration, so accounting by products, it growing that 12 months is 1/3, so 33% growth in terms of the registration. Is it fast? Not too, because if you're looking back into the asset held by foreign investor in this CIBM market, it's still quite disappointing. It's still under 2%, and as Sanjay has rightly pointed out, because for foreign investors, those we are very known them very well here in Europe, they still have a few concerns like governance, and then this one thing, and also about the liquidity, the repatriation, and also credit agency, the credit rating. And the good news is, I think from Chinese government, for those we deal with and the regulator, they are very open to listen to it. And they will address those questions step by step. We cannot expecting over the night everything will be pretty. Everything will be going smooth as in very mature fixed income market, those developed for more than 100 years or longer. So I think the good news is the green light is there at the end of the tunnel. Like a few weeks ago, we see the announcement coming from the Sino-US agreement that is now some US credit rating agency will be start to allow going into China. So I think gradually some of these concerns can be gradually improved. And then hopefully that we will see more foreign investors, not just the central bank or sovereign wealth fund, which is currently dominating the foreign players to go to this market, but will be more asset manager, more medium-sized asset owner will come to this market to picking up the China bond market and then enjoying the growth as well. So far this is my very short sharing. There's too many experts today. I don't want to take over those. I cannot compete with them. All right, thank you very much.
So thank you all very much for your time today. If you are interested in we are going to have webcasters on their website that you can look into the details. For any questions you have, we were going to give out contacts. You can reach out to us to ask for soft copies or for the contacts of the speakers. So thank you very, very much for your time today. Thank you.